Welcome to the April 15th, 2019 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman and President, McGowanGroup Asset Management. For those of you that are clients, remember your CPA gets all the documentation they'll need in a secure document sharing vault, so you don't have to go scramble for all the paper. And if you're thinking about becoming a client, be sure to go to NetWorthRadio.com. Let's get started with our fast-paced tour of the global financial markets. I'm going to start with oil. Chevron buying Houston-based Anadarko for $33 billion this week. Just before that, JP Morgan said that the energy sector is the most undervalued in 30 years of tracking relative to book value. The bargain status combined with the money flow associated with Chevron's acquisition says the energy sector could be the best sector for this year, and specifically we're highlighting energy infrastructure in this chart. This is oil at 100. Those are the pipelines. Notice the correlation. The decline in oil, the decline in pipelines. Notice the correlation there. Since then, though, a lot of the pipelines have been finished. Companies reporting good earnings progress. Energy companies leading the S&P right now. But energy infrastructure has the highest dividend rates in the category generally. But look at this. Pipelines are still half price. Oil's gone to 64 this week, almost traded to 65, 64, 61 here. What's the differential? Well, if the pipelines catch up, which they tended to do back here, notice the differential. There would be about 120% potential difference just at current oil prices, meaning oil doesn't have to go up for this differential to start to close, and for potential appreciation. That sector highlighted in this weekend's long play program at networthradio.com. Is there going to be a recession or a bear market? Let's go to the Dow chart for this one. Look at this. That's the peak from early in 2018. That's almost 27,000 on the Dow. That's about 22,000. And we're sitting 26,400 at the highs this week. What does that mean? Well, we went to Bob Dahl. He has his predictions for this year, has a great piece that we featured at networthradio.com about bear market, recession, slowing growth. I urge you to go to networthradio.com, grab that research report. It is the more advanced reading. He says the Dow's not going to make a new high this year. And that means we're range bound on the Dow. He says it's not a recession, though. So we're going to rely on that based upon a record jobs report this week. Job losses, and that is filings for unemployment. The job loss filings were the lowest since 1969. I'll point out the population is over 60% larger now, meaning it is arguably the best jobs market in history. Not a recession yet, anyway. Lift. IP no was the phrase Izzy Sanchez came up with, our Chief Compliance Officer. IP no. I just wanted to cover a history of the ride-sharing stock since it came out late in March. Notice the trade up here to over $85. This week it hit a low of about 58. Ouch. Wow, what gives? Well, they were losing $900 million a year. We covered that in the broadcast. It also says you might want to be more cautious about buying the Uber IPO, which is coming up as well. Sometimes the IPO, I would say beware the IPO, because investment bankers, their job is to sell it at the highest price. Should I buy gold? I'm going to answer that factually and give you a time period most people have forgotten. Back in 1980, when I was mowing yards, gold hit $800 an ounce. Papa Dean predicted it might never get there again. Well, it went to $250. He was right all the way to 2002. That's a 2/3 loss while inflation doubled prices. How effective was that inflation hedge which pays no income? That answers the question, our opinion at least, should you buy gold? Notice the 1900 run here, when everybody thought there would be big inflation, there's not. That was part of this week's headlines as well. And we see gold kind of stuck right here at 1300. I don't know whether it's going to go up or not, so I'm not going to do it. Bitcoin, let's answer the same question. Everybody loved Bitcoin right here, hit 19,000. It's just a file on your computer used by lots of blackmailers, North Koreans, and drug dealers. I don't want to be in that market either, obviously. Goes from 19 to 3. Well, both gold and Bitcoin could be stuck for a very extended period, like the gold chart we just showed you. And that's why you tune into McGowan Group YouTube each and every week, because we're going to bring you a fast-paced graphic tour of the global financial markets with lessons for investors. Munis. Should I buy munis? This chart says no. Muni index about 111% of par value. Par's 100. That's 11% premium for 2.5 yield. I don't care if it's tax-free. That says I'll do better, no better than about 1.5%, and I'm paying a premium for it. What part of the bond market could be a bargain? In my opinion, U.S. corporate high yield. Default rate arguably record low. The unemployment numbers validate that as well. And look at this, 87% of par. Par is 100. You can see this equilibrium around 96% of par back here. And if we reach that, it's a double-digit gain potential while you enjoy a yield. And yes, when there's a crisis in stocks, this index has stock-like risk, but it's also got a yield and a quantifiable outcome after defaults. So the U.S. corporate high yield and the energy infrastructure, still a focus for us at McGowan Group. Thank you for tuning in. Be sure to subscribe, because when there's fast-breaking news, you will get an alert that says we have a program for guidance. Thanks again for joining us. Come down and see us at the Crescent. Start the process at NetWorthRadio.com. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations and bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.